Hello, 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 and thank you for joining us today. Today on the Kathie J Show, we have a very important guy. We're going to talk money. Jason Ruedy, the home loan arranger, is here with us today.
That's right.
You brought the
saving money. Saving money.
Saving money.
We're talking about saving money here.
Just seeing this makes my eyes pop out of my head, Jason.
Right.
So you've been dealing money, you've been dealing loans and helping people with their money for how many years now?
32 years.
32 years you've been running numbers in your head.
I was 10 years old when I got in the mortgage
Exactly, that's what I was going to
business.
say.
I was young.
You were ahead of your time.
My dad's like, get in there and write some loans. I'm like, fine.
But you really have been doing it since you were in your 20s. Like, you really have been doing this a long time.
I'll disclose my age.
You don't have to.
I've been doing this since I was 23 years old.
That's awesome.
23 years old.
So right out of school, more or less, with your education and everything.
Yes.
So you knew you've always been good with numbers, and you knew there was a way you could help people. What got you into the loans?
Oh, gosh. Actually, I moved in with this guy named Bob Call.
That's crazy. We have a Bob Call that used to own a bunch of these bigger, like run the right. So Bob, you say Bob Call around here, and everybody sits up. But you lived with Bob Call.
I moved in to an apartment with this guy named Bob Call, and he was wearing nice suits, had some nice cars, and I was selling residential and commercial security systems.
Oh,
and I'm like, Bob, what do you do for work, man? Like, I like your style. He was like, I'm in the mortgage business. I'm like, what does that mean?
Yes.
He's like, hey, call my buddy Jerry. He owns a mortgage company downtown. This is when I lived in Des Moines, Iowa. And I called Jerry, and he said, hey, come down to my office. I want to interview you. I'm like, perfect. So I went down. Short interview. He's like, you're hired. I'm like, wow, just like that? He's like, yeah, just like that. He's like, you ready to go to work? I'm like, yeah, I'm ready to go to work. And he took me to my desk. He ripped out some pages of a phone book. He put them on the desk. He said, start calling. If anybody's interested, come to my office and grab me.
You had to cold call people
right out of the phone
and just
book.
say, hi, my name's Jason. Are you interested in a loan? How's your business? How's your house?
Yeah, hey, this is Jason Ruedy. I forget the name of the company.
Right, but how that is so
hey,
scary.
This is Jason Ruedy. Just calling to see if I can help you lower your interest rate. Right now, rates are at 6%. What's your rate? You're at 8%. Oh my gosh. Well, looks like we can get you a lower. I didn't even know what I was saying.
But you were like,
I'm like, and then Jerry, I got you guys interested. Come.
So, because every loan is different, because every person is different with their own financial situation.
Yes.
So, 32 years, you've probably seen it all.
I feel like I have. Sometimes I get some files across my desk, and they're newbies for me.
Yeah.
Just recently I had a new one come through my office, but we figured it out, right?
Yes.
We saved this guy's home. He was going to lose his home.
Oh, it was that serious?
It was very interesting.
Yeah.
But he had been to a couple other mortgage companies, local mortgage companies here. I will not name names. But, some of these bigger names, bigger shops. And they were just unable to figure out the equation, right? Figure the deal out. And we got it figured out. I got it figured out.
All right. So today we're speaking with Jason Ruedy. He is the home loan arranger. And when I say home loans, what kind of home loans are we talking about?
Yep. So, Kathie, we're strictly residential.
Okay.
Residential mortgages.
But there's a bunch of different terms, like a VA and a blah, 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 and a blah, blah, blah. Like, you do all those different ones?
Yeah, we do FHA, VA.
You got to know the world. I don't know, but you do. Yeah, FHA, VA, all of them, right?
That's right. Well, there's residential and commercial.
There's
commercial
PCA,
loans.
There's my elbow A.
Yeah.
There's a lot of them.
There's a bunch of different products, but FHA, VA, conventional, jumbo, USDA. We have every single product available, in the United States, right? Alt-A, subprime.
You do it. You do
hard money. We do hard money deals.
And when you say we, who all are you talking about that works in your office? Because you're kind of the guy that works the deals. You are Jason. You are the home loan arranger. When people call you, they might get a service at first. They put you to you, but you're running there. You work the deal.
Yeah,
it's still you.
Me and my other personalities. That's what I was referring to as we. Yeah.
I've known you about 10. Almost. I was thinking I've known you about like almost 15 years.
We have.
Yes, and so I've met a few of you. No.
Yeah. That's true. That's true.
And I love all the Jason Ruedys I've met.
Thank you.
But you guys,
Opinions vary, but
no. You are, even your reviews online, you are, people have trusted you.
Yeah.
And you have saved them. I mean, and when we talk about saving people in this economy, you're saving the roof over their head, which saves their family being together sometimes, which saves the transportation of. I mean, everything is based around our house and keeping that bill going.
Yeah, and residual income, having more income on a monthly basis, right? Like, especially, where we are with an economy right now, the cost of everything is
it's so scary.
Higher than it's ever been.
Tariffs are being talked about. Everything's being talked about.
All kinds of stuff going on.
So let's talk to people right now that have a house or have a mortgage.
Yep.
That's the way to have a mortgage. And they are saying, I know I've got money in it.
Yep.
But I hear these interest rates, and I don't know what I'm doing because we don't. What are you telling them?
Yeah, well, I think
let's talk about the economy. There is a few things in that statement.
I think what you're referring to is, back in 2020 during COVID, interest rates were so low.
Yes.
In the twos, right?
Yes.
And that's now everybody's baseline. Like,
yes.
Oh, I don't want to do anything.
Not doing anything till it gets to the twos.
I'm at 2.75%, but I'm living paycheck to paycheck because I have so much credit card debt and so many other personal loans. I'm living paycheck to paycheck, but I'm not doing anything right now because I'm waiting for rates to get back to 2.75%.
Yeah, right.
And that's just not reasonable, right? Like, I talk to homeowners about consolidating their debt, possibly saving $1,000, $2,000, maybe $3,000 per month.
That's huge. Per month, you can help people save like up to $3,000 a month.
I mean, I've seen over $3,000 a month.
That's huge.
Yeah.
Okay, in this economy.
Yeah,
okay.
I've helped. I remember a file that we worked on. We consolidated around $200,000 of debt.
Wow.
Yeah.
I didn't know that was possible.
Yeah. And,
right.
With credit card debt, with credit card payments, people typically make the minimum payment.
Yes, right.
But in order to pay those credit card balances off or down, you got to double or triple up.
Yeah.
So that's not really
Nobody
your minimum
does
payment.
it.
But,
right.
We help that homeowner save a lot of money per month.
So getting a mortgage is still the American dream. You're saying it's still there. Like
it is.
The equity still sits in there. There's still a way to access it. Don't be scared.
Homes have appreciated over the past 3 years. Even though we've been in a higher rate environment, we've still seen home values appreciate.
Okay.
Moving up, not moving down.
So if someone just bought their home recently, maybe they could call you. Are you saying they might have some money already if they bought it 2-3 years ago?
They could.
Yeah.
They could. And I am one of the only mortgage companies in the United States that has a 90% loan to value cash out refinance with no mortgage insurance.
Okay, that all sounds wrong. And how do you do that?
Well, it's just a product that we have available.
Yes, right.
But per Fannie Mae, Freddie Mac guidelines, they only go up to 80% loan to value. So anything over 80%, you're required to carry what's called private mortgage insurance. So we have a 90% loan to value cash out refinance with no private mortgage insurance.
That's crazy. That right there, being able to, when people don't realize that, when you refinance, you can drop the mortgage insurance. Like sometimes that's how you can cut bills, right?
Yeah.
That's how you do that.
Yeah.
It's little secrets that none of us know.
That's right.
Yes.
That's right. Getting rid of your PMI could be a couple $100 a month. So if we can get you a 0.5% better in interest rate and get rid of your private mortgage insurance, you could be saving $350 a month.
That's groceries.
That's a grocery run.
Yeah.
That's right.
So Jason, I love the fact that you've always been so nice at letting me just. You don't care that I dummy it down because I really don't know what I'm talking about. Because you say like 5 + 5, I can do that number. Like you do other ones, and I'm like, ding. And then if someone right now has, they're sitting at like a 2.7 interest rate from when they did that, and interest rates are, I don't know, whatever. Say they're 4.5. You're saying they need to take into account this high interest loan on a credit card that they can get rid of by absorbing it into the equity. They need to take into account a car loan that's got a high interest, right? You're saying that's what you help them with.
Yeah, I could go a few different directions here.
Please do, because I think everybody's got a different situation.
Yeah, everybody's situation is different, but it all depends on how much debt we're wanting to consolidate. First of all, so I always want to take a look at, some homeowners want to look at a home equity line of credit for, $25,000. So they have a first mortgage. I'm just using rough numbers here,
go for it. Yes.
Let's say their first mortgage balance was $380,000 and their interest rate's 2.75%.
Right.
It's a great rate.
Right.
On a decent amount of money, right?
Like I would say, sit on it.
Right.
Don't do a thing.
Well, okay, but in this scenario,
tell me. But I also have credit card debt sitting over
if
here.
you only have $25,000 of credit card debt, I'm going to say yes, a home equity line of credit is probably better for you. Okay, because we're only talking $25,000 on a home equity line of credit versus $380 at 2.75.
Wow.
So we don't want to touch that $380 at 2.75. We have only $25,000 at
based on what I had in my debt,
7-8% on a home equity line of credit. We don't want to touch the first based on that scenario. Now, if you have $100,000 of credit card debt,
people do.
And we're going to pull a home equity line of credit for $100,000 at 8%. And you're parked at 2.75 at a $280,000 loan amount. Now we're looking at a blended interest rate, Kathie.
Okay.
So now we got 8% plus 2.75. Now we got to blend that interest rate. What's your blended interest rate? 5.5%? Well, if I can get you 5.5% today, do a refi cash out to pay off all your debt.
Yes.
That's a more reasonable way to look at that specific file.
Okay.
So
and think about the stress you let go of. By saying that I don't have those bills anymore. Think about just that, right?
Kathie, there are a lot of homeowners out there watching us right now that are living paycheck to paycheck.
Stressing, not sleeping about it.
The cost of living is homeowners insurance is higher than it's ever been. Car insurance is higher than it's ever been because of the insurance debacle, nationwide. Real estate taxes are higher. Everybody's mortgage payment's higher.
Groceries
Excel
are higher.
Energy,
Everything. Going
cable,
out for fun is higher.
Cell phone, all these variables associated with living, the expenses of living are higher than they've ever been. So they're living paycheck to paycheck. If I can loosen that load $1,000 a month, that means that family
$1,000
is going to be able to maybe go out to dinner, do some things family.
Dad's going to sleep better. Mom and Dad aren't fighting as much over the finances. I mean, it's everything.
Yes.
The stress about money and bills.
Each file's different, but if you're sitting there hanging on to 2.75%. And you're living paycheck to paycheck, I think there could be an alternate way to look at this and maybe put some numbers together to help that homeowner live a better quality of life.
Yeah.
At the end of the day, you only have one life.
Yes.
Right?
And you do.
You only
gotta
have
live
one
it the
life.
best,
so
Jason.
let's make the best of it while we have the opportunity to do so.
Yes,
right?
and I loved that. One of your reviews, the person talked about how you had talked to them about how hard they work for their stuff and how they deserve to be able to not be stressed out about the paycheck to paycheck. Like you kind of like are a little counselor in the way too about you're working hard, you deserve this. Don't be scared. Like,
That's true.
And I loved that. I loved that. Your reviews are great. People love you.
Thank you.
I love you.
I try really, really hard to work for my customers. I want to perform for them. I want to do the best job that I can, and I want them to benefit from that transaction.
Yes.
I want them to walk away and be like, man, that was a really smooth transaction, but you know what? We got the lowest interest rate. We got the best deal. We know that we did. And
So here's my next question. And you hear when someone says we're thinking about a loan or whatever, oh, they're gonna pull my credit gets dinged.
Yes.
Here we go. Well, I can't possibly get a second opinion. This place just pulled my credit, and I guess I got to go with them. It's almost like I'm suckered with the first car dealership I walk onto. Is that the case? Explain to me that.
Not with my company.
How is that?
Well, all right. So I'm going to get to that.
Okay,
but I first
fine.
want to go back to the question. If you call a mortgage company and they do a hard credit inquiry, in today's mortgage environment, TransUnion, Equifax, they sell that data to other mortgage companies across the United States saying, hey,
this person's
Kathie
actively
J
looking.
just had a credit report pulled by this mortgage company. She must be interested in a mortgage.
So then all of the rats come.
Oh, geez. I'm talking
that's how they figured
like
out.
100 or 200 phone calls in the first 48 hours.
That's crazy.
Sometimes I'm on the phone with my customer. I'll be talking to my customer when they had the hard credit inquiry pulled by that previous mortgage company, they're already getting phone calls.
Yes.
Well, before they could even hang up, they're already getting solicited.
And it's all people that are trying to sell you a bag of goods.
And they're so annoyed and frustrated. I have had customers in the past that their work number was the number all these companies were calling, and they couldn't stop it. And it was like, oh my God.
Yeah.
And so
that's not cool.
With my company, we do what's called a soft credit pull.
Okay.
Because I don't want to inconvenience my customer. I don't want them to get those 200 phone calls.
No way.
I don't want their phone to blow up.
No, I came to you to feel, like you would protect me.
Listen.
And if I go to the Sharks, I'm not going to feel good about it. Yeah.
So I do a soft credit inquiry.
Okay. I didn't know that was even possible.
Yep, and that prevents all of those solicitations.
From finding me, making me feel icky.
Yep, and then we go to a website called optoutscreen.com. We opt you out 5 days later. On the 6th day, we pull a hard credit inquiry.
Gotcha.
We opt you out so you don't get those calls. Then we go back and do the hard credit inquiry.
But that's cool that you take the extra step for me.
It costs my company about $100 to $150 per file.
Right.
Extra
to protect
my customer from those phone calls. But it's worth it.
It really is.
It really is. If you talk to somebody who's getting their phones blowing up and they're having to ignore phone calls and they're really frustrated.
They probably went with the wrong company.
Well,
because they sold you out. They sold you out.
They're happy that I'm pulling the soft credit.
Absolutely.
They're happy that I talk to them about it. First of all, I always bring it up and say, hey, I want you to know we're going to do a soft pull, right? And I explain, and they're like, "Oh, thank you," because I've already had the hard, and I'm getting blown up. They're frustrated.
Plus, you hear it dings your credit. Like here, I was coming in with a 740, and then you pulled it, and now I'm at a whatever.
That's true.
The
if
mister
you have
out there.
multiple hard inquiries, it could drop your credit score.
So if someone pulled a credit already and they don't like the answer they received from whatever company, give you a call?
I think I'm going to reverse that. No matter what. Yeah.
Okay.
Call me for a second opinion.
Amen.
It is not worth.
I can't stress that enough. Call Jason for your second opinion. He's going to take care of your loan.
Make sure you're getting the lowest interest rate and the best deal. If the interest rate they're providing you is 0.25% higher than mine, that could be a couple $100 a month. It's a grocery run.
Yeah.
It's not worth it. They're not the one making your mortgage payment. You are the homeowner.
Yeah.
Make sure you're getting the lowest interest rate and the lowest payment.
Yeah.
Right?
And you explain, there's a lot of paperwork in a loan.
There is.
You explain it all. Like, there's no,
Full disclosure.
Yes,
Full
exactly.
disclosure.
There's no hidden fees coming out of nowhere. I'm not going to try to get the money from you out of this side.
No.
It's not, this is honest Jason, and I love that about you.
And thank you. And the way my company is structured, we are a mortgage lender. So we fund loans in our own name, right? I'm not a mortgage broker. I'm a mortgage lender. My pricing is superior to the majority of mortgage companies throughout the United States, especially the big mortgage names.
Really?
Especially.
I feel like you should say that again.
Yeah.
Go ahead.
So the way my company, the way the Home Loan Arranger, the way the Home Loan Arranger is structured, my pricing is superior to the majority of mortgage companies throughout the United States, especially the big mortgage names.
Because the big mortgage names love to taunt because they're big. They can get the lower rates and stuff or whatever the stuff is. You're saying it all at the end of the day goes down to the person, and you're working harder than they are.
Kathie, I'm talking about 0.25% to 0.5% better in interest rate on a daily basis.
That's a grocery bill.
I wrote a deal on Friday. It was a purchase deal. Customer was had already shopped before I spoke to her, and she was at that mortgage company gave her 6.875%.
Okay.
I'm sorry, 5.875%.
Okay.
I was off. I was at 5.375 on a 15-year fixed.
Wow.
It's a half a point.
Yes.
She was like, I'm really glad I called you.
Yeah.
And by the way, her phone was blowing up, and I was doing a soft credit inquiry.
See?
I was protecting her. Right?
Yeah.
You're not gonna get any more of those phone calls, not because of my company.
You're really not losing anything to call you, is what I'm hearing.
With everything, the cost of everything so much higher.
So much higher. If you have a mortgage, you might as well see if there's any money in it that can relieve some of your other bills.
I have a visual.
All right.
That person buys this mattress and box spring, and they're like, the salesperson says, hey, Tom, would you want to get this delivered? He says, no, I'm gonna throw it on top of my car. We'll get it home.
Right.
Right. And Kathie's driving down the interstate, and you see that guy's mattress folded like a taco. He's driving, hanging on for dear life, hanging on to that mattress.
Right.
It just doesn't make sense to do that, right? Just get it delivered, right?
Right.
Did he?
Right. You're the delivery.
Right. What I'm saying
use the delivery.
It doesn't make sense to take a higher interest rate. It doesn't at all.
It doesn't.
There's no value to it.
There's no value at
No,
all.
they don't make your mortgage payment. They don't give you a free trip to Hawaii for paying more interest.
Yeah, you're right.
They don't do anything.
For some reason, we just feel like all of a sudden we owe whatever company we start with.
Yeah.
It's like we owe, all of a sudden this is the sales guy I'm going with. I don't know why. We're so scared to shop around.
You bank with this certain bank, and you're like, well, I'm going to go in and, they're going to
help me with a loan.
That's right.
And it's like, no, shop around.
I have a banking relationship for 10 years with this bank, and by God, they're going to take care of me. Really?
Yeah.
Call me because that person on Friday got a 0.5% less in interest rate. That's real
huge.
money.
Right. That's huge. And you can explain the loan. You're not just somebody that the bank has hired that's in that department that's going to be like, sign here. Like you're explaining. So there's no hidden anything. And that's what really matters because mortgage, it's the most, what do they say? It's the most stressful purchase of your life.
Can be.
Yes, can be.
Can be.
Can be.
We don't want it to be, but
I
it
love
can be.
that you just said that. It can be, Kathie, but it doesn't have to be.
Can be. And I'm a boutique mortgage lender, Kathie. So I'm low overhead. I don't have a big office space.
That's what boutique means?
Boutique, yeah.
I thought it meant you gave fancy loans.
No. Boutique means I'm intimate. I'm small.
Oh, okay. All right. It's you.
Yeah, well,
yeah,
it is
no,
me.
I do know it really is
me.
you. Yeah.
I have a very lean staff, but listen, we're rock
I know you do.
stars.
Yes, you are.
These people step up.
Yes.
But
I love the
boutique-
fact that your hands are in it because there are some other bigger companies around there, and the people that own the company, they're so busy driving around their Lamborghinis, they don't even care what happens in their company.
I don't have a Lamborghini.
Nope. What you have is a bunch of people you're helping.
Yeah, and I'm the only loan officer. So if you call the home loan arranger, you're going to work with me. I don't have any other loan officers that work for my company.
No, it's
I'm the
you.
only one. I'm the loan arranger. I work alone.
I feel like so people can find you at thehomeloanarranger.com.
Yeah.
And give him a phone call. Think about this. This is the kind of money he can have every month. You can be saving this, going to whatever other bills you need to pay off for your family. Me and the family. Kids are expensive, Jason.
Yes.
You know that.
I do.
And you're a family guy. You know all of it.
I do know that. I've got 11-year-old twins.
Yes.
They're money pits.
They are, and you want to give them everything.
Yeah, I don't even tell my kids I'm going to the grocery store anymore because they're like, "Can I go?" I'm like, you're like, sure. And then they're running around going, nee,
Right.
I want.
You're absolutely right.
So now I'm like, anybody looking? Nope.
Yep. Right. I go to Target without the kids. I'll guarantee you on that.
Where'd you go? I'm like, the grocery store. And they're like, what?
Did you get Doritos?
What you talking about? What you talking about? I'm like, it's right. That's right.
We've been speaking today with Jason Ruedy. Jason, I've known Jason for about 15 years now. He is everything that you see. He's a good guy that wants to help you, and he is all about being hungry for that lowest loan or the lowest rates. So, Jason, before I let you go today, is there anything else you want to tell everybody about why they need to come to you?
Absolutely, Kathie. It's important that homeowners get a second opinion. Don't get stuck with a higher interest rate and a higher payment. Make sure you're getting the lowest interest rate and the lowest payment. Kathie, thank you so much for having me. Had a great time. Thank you.
Kathie J.